Okay. Okay, first of all, it's okay? That's it? Now? Okay. First of all, thanks to all of you to come here, particularly on a Saturday afternoon at the COP27 at the end of the first week. It's even more commendable. Okay, so Eva was saying that we're here to talk about insurance, which a lot of people think is boring, and I don't think that's the case. I think it's misunderstood. So we're going to prove, in fact, that insurance, in the context of climate change adaptation, is a critical sector that really is a huge lever globally in Europe and in our country, Spain, which is very vulnerable to the impacts of climate change. And for that, I'm very, very lucky to have a fantastic panel that have come here all the way to Egypt to share their experience with us. And I'm going to just very briefly go through the session so you understand how we're going to look at this. So what we're going to look at is the context of climate resilient development, which was one of the main findings or one of the main objectives of the Working Group 2 of the IPCC, which is this idea that, of course, we all have to develop, but we have to now incorporate the fact that climate change is happening, as we actually saw in many countries across the world this summer. And we do think that insurance and innovative insurance can be one of the solutions for climate change adaptation. So what we have here is a climate resilience informal dialogue. Climate resilient dialogues is one of the things that the EU has planned in the context of the EU climate change strategy for adaptation. So what we're going to look at is the first part. I'm going to give 5 minutes to each of our speakers, who I'm going to present in a minute. And we're going to have two questions. One is, how can insurance help to reduce the increased risk caused by climate change? i.e., how can you ensure resilience? But on the other hand, how can the insurance system itself adapt to the risks from climate change? i.e., how do you make resilient insurance? For that, we're going to have 4 very good speakers, strongly recommended. We have Francisco Espejo, Deputy Director of the Consorcio de Compensación de Seguros from Spain. We also have Ivo from Swiss Re, who's going to, from the Public Sector Solutions Department. We also have Shrey Royal, who comes from, he's actually one of the youth global climate change adaptation leaders, and he's also part of a new company that you're setting up in France, and he's going to, at one point, tell us all about it. And then Maria Jose Sanz, Director of the BAS Center for Climate Change. So after having, each of them is going to present for 5 minutes, addressing one or two of these questions. We will then have a video projected from Reinhard Merkler, who couldn't come. He's actually one of the lead authors in the IPCC, and he actually addressed the concept of loss and damage in Working Group 2. And then in the second round, and I have already been briefing my people, that what I actually would like is for them to look at how insurance can tackle particularly impacted sectors, like, for example, coastal areas, cities, infrastructure, or even nature itself that's going to be impacted by climate change. My plan for that second part is that I don't actually have to moderate, because I actually want them to have the opportunity to have a dialogue with each other. So I encourage you, and I welcome that you reflect on what each of you has said, and you basically kind of carry the second part forward. And then in the third part, we're going to open it to the audience, so that then the people attending here can actually have the opportunity to ask questions. I've actually asked 2 people, Anna, to be row 0, so to kind of break the ice, so we have some questions. But of course, everyone is welcome to participate. And with this, the floor to Pat.
Well, thank you, and thank you for inviting me. Good afternoon or evening, everyone. And well, what normally we say like a mantra that insurance is an instrument to cope with the effects of climate change and to deal with risk. But we don't really elaborate how the insurance is actually entangling into the different components of risk. You know that risk is transferred to insurance, that's right, and insurance is a risk transfer mechanism, essentially. But risk is composed of three things, which are the hazard. Climate change is affecting hazard level, the exposure, and the vulnerability. And vulnerability itself is composed of other two things, which are the susceptibility to damage and the capacity response. So in how particularly insurance deals with every of the components of risk, apart from getting it transferred, is that the most obvious one is that we are, as insurers, providing capacity response to the society, and therefore reducing vulnerability. Because after a disaster, we provide economic, quick and safe economic recovery. As for the susceptibility and exposure, that goes very much in line, both through the loss data and through the modeling that insurance does, we are able to pinpoint and to, through other mechanisms, enhance the reduction of susceptibility. One of them is premiums, when the other ones is, for instance, the surcharges, or the capacity that it is retained from losses. Okay, and what we also do is that we are providers of information to all stakeholders in dealing with reducing risk. So we are able to say which parts are have more, in which parts is action more needed than the others. And last but not least, insurers are big investors because they have big amount of money, and with that, they can, in the long term, try to change the hazard levels by their investment policies. But that's on the very long term, and that's actually what is being discussed here in terms of mitigation. But that's the first thing. And about how can insurance be resilient itself? Well, the first thing is, in my opinion, is that we should be able, and I'm sure that Ivo will talk extensively about that, we should be able to reduce the insurance protection gap. At a global level, 2 out of each 3 euros are not covered by insurance in losses that are actually being produced. Having all these losses covered, like I said at the beginning, reduces vulnerability by enhancing capacity response, and that's how it works. And in this regard, having different mechanisms in trying to reduce this insurance gap. In Spain, the situation is inverse, because in Spain, 2 out of 3 euros in losses are covered by insurance, because we have a mechanism that implies a public-private cooperation automatically, and the problems that in other countries appears, in which you may have 90% of insurance penetration for common property insurance, but only 20% in catastrophe, or say flood insurance. In Spain, the figure is the same. So if in Spain 75% of the houses are insured, 75% of the houses have flood insurance, earthquake insurance, etc. So it's a way to try to reduce this gap. It's of course not only the only way, but it is a way. I'm sure that we will have the opportunity to discuss about the different possibilities and schemes, but I don't want to take time from the other panelists, so I'll stop here now. Thank you.
Thank you. Ivo, what's your take?
Okay. Good. So I was indeed joking with Elena at the beginning. So it's super bold. 1.5 hours on insurance. I hope not everyone will run away, but I completely agree with her that insurance is actually exciting, and I try to convey a little bit of this to you and how useful the role is in climate adaptation. And I will build on what Paco has said and then add a few dimensions. I want to touch on 5 things actually. So obviously In terms of the scope, what insurance can bring to the table is everyone thinks first of the risk transfer capability. So we offer our private balance sheet so that enterprises, private individuals, even governments can transfer risk and do other things with their money. And we take the risk. Then secondly, you mentioned it, Paco, we have to be obviously good at understanding risk. So there's a lot of investment in risk analytics and risk modeling, and that knowledge can be made available for other purposes, such for instance governments to plan, to think about where they get the best bang for a buck, if you wish, in terms of an investment in adaptation measures, for instance. So the application of the risk models we develop for our own purposes is much broader than just for our own industry sector. Then Paco also alluded to it. Insurance can play a role in incentivizing risk reduction. On the one hand side, we provide price signals, and it's very naturally built into how we operate. For instance, if you implement a sprinkler in your commercial entity, if you have a alarm system at home, your premium that you pay is typically smaller compared to if you don't do anything. And these kind of mechanisms also work in terms of climate risks. So depending on what kind of protection measures are in place to avoid that your house floods, your premium will be smaller. So through these price signals, we can incentivize investments in risk reduction. Some insurance schemes also have a built-in system to allow you to build back better after you're affected, to make your home, your property, or whatever it is, more resilient. What is also quite interesting, and if you look into the history of insurance, that insurance has been extremely important partner in setting standards for risk reduction. That was with the onset of electricity to apply, for instance, and develop standards to avoid that your house burns down, how construction has to be done so that you don't have conflagration, for instance, urban fires, etc. I think there is a role to play to also apply that in climate adaptation. My fourth point is we apply a few very simple principles in insurance. One of them is that we develop pre-agreed rules for under which, and define triggers, for instance, under which you receive a payment once an event has happened. Now, this is a very simple and basic principle, but think about the application of that principle in completely different circumstances, such as, for instance, humanitarian financing. And there are a lot of discussions also in COP27 on this topic. Last year, humanitarian financing was $30 billion. 98% of that amount is paid after the event has occurred, although 55% of all crises can actually be predicted. Now, if you have a post-financing mechanism, you struggle, you have pledges, etc., in the humanitarian system, it takes a long time. And the sooner you actually intervene, the lesser actually the impact. So we're advocating in a number of fora to actually systemically change how crises are financed in the humanitarian system to include pre-triggers of when payments should be made. For instance, if the wind blows too hard, if there is an earthquake shaking, we can make payments very, very quickly. It doesn't even matter in the context of humanitarian financing whether the money comes from private balance sheets or then from the public. But implementing pre-agreed rules will have a tremendous impact in terms of the effectiveness of humanitarian financing. It becomes even better, and there are a few examples. I talk about examples a little bit later if we have the time. it becomes even better if we manage to make payouts early enough, and that is possible for slow onset crises such as droughts, for instance, so that we pay early enough so that the money can be used to actually prevent an event to develop into a fully fledged crisis. And happy to talk about that a little bit later. Lastly, there is a big role for insurance to play actually in de-risking investment, infrastructure project. And that also applies to climate adaptation infrastructure such as dams, etc., etc. To taking risk on the balance sheet, we can actually facilitate investors, be that private or public capital. So to cut it short, or in concluding, there's no shortage, I think, of useful contributions for the industry. There are many, many challenges, of course, in terms of how we operationalize that and how we bring these to scale. So I think that's an interesting discussion to have. And I'm the first one to admit that insurance is one element of a solution. It's not a silver bullet. Risk reduction and prevention should always take precedence. I think I stop here because I talked a lot and skipped the second question.
That's fine. Thank you very much.
Oh.
Yeah. What do you think of what is your vision, and from your experience in the experience you've had in India, maybe you want to talk a little bit of.
So in my career, in my line of work, I've worked mainly in the agriculture sector at the low income and ultra poor level for about 10 years now, and I can bring in some experiences from that and discuss the role that insurance can play and that it should play in increasing resilience. So in India, agriculture is largely a gamble of monsoon. Irrigation does not really exist. Groundwater levels are really, really low. So the de facto solution of just pumping out groundwater, that doesn't work anymore. We have officially hit paleo water. So we've pumped out so much groundwater that water that was raining during Paleolithic times has been reached. So we completely depend on monsoons, on the rainy season essentially. And monsoons, if they get delayed by even a day, it causes millions of dollars in lost agricultural productivity, and that impacts the economy as a whole. Now, farmers have figured out how to perform agriculture, how to deal with risk, pretty much since as long as farming has existed, pretty much since as long as agriculture has been practiced by humans. So there have been informal risk mitigation strategies, informal risk mitigation institutions that have always been there, whether it's local level loan providers, whether it is some kind of self-help group activity. Now all of these measures, so they have worked over centuries and millennia. They don't work anymore, and they don't work anymore because they were not made for climate change and for the impacts of climate change, for the new risks created by climate change. So what happens is, if there is an event, a drought event or a flood event, which is supposed to happen or expected to happen once in 10 years, once in 15 years, if such an event is happening every 3 years, every existing mechanism to deal with uncertainties in agriculture fails. Now, at this point, the formal mechanisms have to step in. At this point, the public sector has to step in, and the markets have a role to play. So far, in most examples that we saw, at least until as recently as 20 years ago, formal financial institutions have failed to deal with this challenge. And in fact, because of the way they are structured, farmers get caught in a vicious circle. Because if you want to develop climate resilience, you need investment. You need investment in technology. You need investment in diversifying the kind of crops you grow. You need to figure out what percentage to allocate on cash crops, and so on and so forth. Now, because credit providers understand that farmers face an increased risk, they are less likely or less keen on providing access to credit, or they would jack up interest rates. Because this reduces access to credit, this reduces the the possibility of investing in resilience. So even if a farmer understands what they need to do in order to become climate resilient, they are less likely to be able to engage in it. That way, when natural disaster hits, or well, not even a natural disaster, when a small fluctuation, which is now a regular event, is caused, they are not able to respond to it. This keeps their credit rating low, and this cycle continues on and on. Now, this is where insurance sector has to step in. This is the kind of risk that needs to be covered, and for better or worse, money is what makes the world go round. So we need the markets, we need private players, and we also need to rethink our understanding of climate change as a phenomenon as a whole, because the insurance sector covers risks of all kinds, and it has wide-ranging applications. It can cover risks of accidents, of theft, and so on. Climate change is often framed at conferences like these even as a technical challenge, as a scientific issue. Climate change is not an asteroid heading towards the Earth. Climate change is a social issue. It's an issue of discrimination, and it's a human rights issue, and it has to be seen as that. All the issues caused on human populations from climate change, they arise from historic patterns of discrimination, and they arise from pre-existing social ills which then get exacerbated. So as an example, climate change causes resource crises, and when a resource becomes unavailable, the first group to lose access is women. So women perform more than 50% of agricultural labor, but they are much less likely to get access to agricultural loans, for example. The first group to lose access in an Indian context are disadvantaged caste groups. So climate change is essentially a war on them. It's an attack on them. So at that point, providing solutions for increasing resilience is not just a sound financial decision. It's also the appropriate response that should be taken to a human rights crisis. So that is my take on the role insurance can play in ensuring resilience and in ensuring in fulfilling our social responsibility. Yeah.
Thank you. Maria Jose, what do you think from the point of view from the perspective of climate change, and a sector that deals with risk, but it's also itself?
It is extremely difficult to intervene after these excellent presentations, but I think what is very encouraging is to see that the sector is starting to think in ways to adapt their products to, as Ivo was saying, to anticipate the payments so that they are more effective and they build somehow indirectly resilient. So I think that's a very encouraging thing. My mission here is to remind us that it's not only a challenge for the farmers in India, it's a challenge for the global population. No? I mean, there is no doubt that climate change is impacting by floodings and breaking temperatures. We had this summer, droughts, wildfires, and everything is coming together. And it's coming together not anymore in the developing world, also in the developed world. In a very scary manner, I will say. There has been always this sense of, oh well, but we cannot attribute to climate change. But now there is no doubt. The attribution is clear. Is an anthropogenic signal there. So what I usually work on, and my message, you, Elena, know me very well, is that, for example, we cannot conceive any more mitigation in one side and adaptation on the other side. And this, in a way, it relates to the sectors and how the sectors, the economic sectors, are going to suffer from climate change. There have been clear messages from Working Group 2. All regions in Earth are going to be affected. In particular, temperate regions, amazingly, are going to be extremely affected. And this takes clearly Europe, the Mediterranean region, in the middle of this. I think this also very interesting to see that because it's becoming critical, we really need to find, and this is the challenge that is discussed here tirelessly, we need to find a way to align the financial resources in a way that they are synergistic. And they are synergistic with the pathways we are building for the future. And I mention pathways because we are having communities building mitigation pathways, communities are starting to build adaptation pathways, for which I think insurance companies have the best knowledge in Earth. And I think we cannot afford anymore to double think and double do things. We don't have time to do so. So I think it is essential, and I think Ivo mentioned that obviously they have the best experience. I took notes here. They have the best experience and the best data on quantifying risk. But not only that, the best experience on standards. And we are starting to build the standards for these things. And I think it's going to be a waste of time if we don't take the expertise of the insurance sector. So I hope that it will be much more engagement on that. I think something that Ivo and Paco mentioned also is open the data. Open the insurance data for taking better decisions. I think this is something insurance companies can really work with. And the second point that I think is extremely important is this direction they are taking to really think on how what they have can be adapted to increase resiliency. So I believe that that's extremely important. And I mean, then the second question to put towards how the insurance sector can be helped. Well, I think it's in the core of their business. No, it can be helped by reducing the risk. So I think that question is answered by itself. So I'm not an expert on insurance, so I cannot say much about it. But I think data and starting to evolve what they have in order to create and to not to create but to facilitate these adaptation pathways and creating resiliency is the way they are taking. I've been hearing, and I think is the way with which it will serve all of us.
Okay, so before we're now gonna video from Reinhard Mechler from IASA, and also, as I mentioned, from Working Group 2 in the IPCC. But just to say that I think it fits very nicely with what Maria Jose was saying, because what he's going to project, you will see, is a kind of policy framework that in fact includes mitigation, adaptation, protection, and it's kind of creating a taxonomy so we see things. And I fully agree with Maria Jose, the time has come that we have to really look at two sides of the same coin. Climate change, until now it was really about mitigation, but the impacts are here. And in fact, we have to really make sure that we work together. So I think Reinhard is going to give us some very good tips on how we can conceptualize this system in a much more integrated way. So if we could maybe watch the video now.
Loss and damage is currently seeing a lot of attention at COP27. Progress and pledges are being made. However, a number of questions remain that inhibit further progress, as I see it. One is the integration of loss and damage into the bigger scheme of things: climate adaptation, climate mitigation, climate finance. Another related question is, how do insurance solutions lead the way on loss and damage? Or can they lead the way? How are they integrated? With colleagues in the Flood Resilience Alliance, we developed a policy brief, Closing the Gaps, that tries to develop a comprehensive policy framework that can show how different actors and positions may be integrated and aligned. Schematically, one could identify positions in loss and damage as follows. The Global South has been requesting a facility which will provide ex-post response, recovery, and rehabilitation support. The Global North has been focused quite a bit on the ex-ante financial protection part, insurance-led solutions, risk transfer, contingent credit, progress-based financing. Social protection has also been mentioned a bit, like shock responsive schemes, etc., cash transfers, and so on. We developed a comprehensive policy framework and visualized it here with that figure. On the left-hand side, you will see somewhat vague loss and damage taxonomy, averting, minimizing, addressing, that many people have a hard time understanding. On the right-hand side is still a little bit clearer taxonomy of risk management, pre-event action and post-event action on actual and potential impacts need to be taken forward. The framing is about gaps. Mitigation needs are not being serviced sufficiently, so this means there are quite important risks that remain, which require adaptation, physical, social, and other types of adaptation. However, they are not, these needs are not sufficiently serviced, and we got a big adaptation gap globally and locally. This then means, in times of events, people need to bear the impacts, the losses and damages, ideally with pre-organized financial and social protection schemes. Quite often they don't exist or are not fully acceptable or sufficiently implemented. So we got a big protection gap. This then means that relief, rehabilitation, and relocation, reconstruction needs to come in. If it doesn't, we got a big response gap. Integrating across all gaps means there's a failure to act, and this then also indicates, and this is what we are seeing actually, catastrophic impacts borne by vulnerable women, men, children, communities, and ecosystems.
Was the stuff shared with us beforehand? No? Okay.
The policy brief also identifies a
I
number
don't
of
understand the
recommendations
thing,
from the Zurich Flood Resilience Alliance. First one relates to the adaptation gap, where really the 50 billion per year starting in 2020 should be paid to locally led efforts, we suggest. The protection gap needs attention. I asked that question, is insurance leading the way? I would say yes, it can support action, but it needs a much bigger perspective, and it needs integration with the social protection part, shock responsive schemes, pay for work schemes, cash transfers, access to health facilities, etc. So there's a bigger imperative, I guess, here that should be considered. The response gap also is important. Additional funds for relief and rehabilitation ought to be considered as well. In most countries, we have pools that, in theory, but also in practice, supply after the fact support. Quite often, these are not well capitalized, so particularly in vulnerable places and countries, can they not see further attention and finance support would be a suggestion here. The Santiago Network discussions and overall global national funds can help to work on those gaps and reduce and tackle those gaps. Last one, we have got a visualizer that shows our thinking and a way to understand losses and damages. Thank you for the attention and good luck for your discussion.
Okay, so hopefully that gave you some insights into how I think what Reinhard provides is a great framework for, on the one hand, seeing loss and damage, and on the other hand, having a risk autonomy, and how now have to do this integrated system of mitigation and adaptation, since the best adaptation is to ensure mitigation. On that basis, sorry, I'm not very good with this thing. To ask, is it working? Yes. Okay. Hello? Yes. Okay, so I think the key thing now, to think of examples. I think what I wanted to now, well.
A round table.
No. Okay. Much better. Yeah. Okay. I think I'm much more comfortable with this. Okay. So I think I wanted to then now turn to the idea of finding solutions within insurance, for adaptation. So on that basis, I think our thinking is, if we think of agriculture, as Ray was mentioning, or we think about coastal areas which are incredibly vulnerable, and when a lot of the population is actually located, or we think of critical infrastructure. Paco and I just attended an event in the EU Pavilion, which was looking at critical infrastructure and how vulnerable it is, in the context of climate change. Or we look at, other systems. How do you think, what, for example, is the consortium doing in terms of an insurance, innovative insurance solutions that you think we could really develop in the face of climate change, because we're not in business as usual anymore. We're really in an emergency, so we have to think outside the box and quickly. The same question for Ivo, Shrey, Maria Jose, and again, as I mentioned at the beginning of the session, if either of you said anything that you found interesting or resonated with you, feel free to also have a dialogue with the people in the panel.
Well, I think that Ivo said it. There is no silver bullet here. There is no way to actually solve this problem. And I think insurance has three items, three issues to resolve. One is availability, the other one is affordability, and the third one is this indication of the risk level in being more explicit in trying to reduce it. And in this regard, this is what I call a short blanket problem, in which you have to decide if you cover your feet or you cover your shoulders, but there's not enough for everything, because if you go, if your choice is that insurance should be a risk reduction tool by stressing everything on premiums and deductibles, then you probably will hamper affordability. And in Spain, we made one choice for losses to property, that is going for affordability and availability. That's why probably our system is not directly as good as others in reducing risk. But I underline directly, because the other way for us to cope with this, for insurance in general, not just for the Spanish system, but it's already mentioned here in the table, is that insurance should team up with others. By itself, it cannot do anything. But if you provide data and provide information to those handling the risks directly and taking and having the competencies on land management, for instance, that's the way to do that. Because as for now, what we are witnessing in Spain, and I would say elsewhere, is that it is not, the hazard level is not the main problem. The main problem is the exposure. We have, you and I came from another side event in which a panelist said we create the problems ourselves, and that's true. When urbanizing floodable areas, when having agricultural productions that are not well adapted or that are demanding on higher levels of water, you are making yourself more vulnerable in a way. So, of course, insurance can try to cope with the problem, to provide some financial resilience to the system, but there is another step, that it is not only providing financial resilience, it's providing what everyone here understands as resilience. And as that, like I said, we have these tools, but it is inevitable that we should team up with other governmental and organisms, and of course with all the levels of governance. We see that the degree of implication is not the same at national government, at regional government, at the local governments, and that's another issue that probably should be resolved in making borders to the responsibilities that each one has to have, because everyone has to have skin in the game if they want to be really implicated in this risk reduction. And it's not only a question of insurance. Of course, insurance is a major partner in this, but this is not the only partner.
Mm-hmm. Ivo, what do you think?
I want to provide you with a few examples that excite me. I think that exemplify how insurance can be useful for climate adaptation. I will take one example from agriculture. one from critical infrastructure, energy, and another one from actually natural capital, coastal, actually coral reef insurance. So let me talk about these examples. The agricultural one is particularly interesting from my perspective because it provides what I said before. It is designed to pay out early to avoid actually a crisis to develop into something much bigger, a catastrophe. So the example is in Kenya, in North Kenya, where you have pastoralists which depend on livestock as their productive assets. Kenya suffers every now and then, including this year, last year as well, under drought circumstances that can lead to a situation where farmers don't have the fodder and the water to actually keep the livestock alive. They need to sell their productive assets, which brings them into a poverty spiral. So the program that was designed with the help of the World Bank and a few others was to establish an insurance scheme that pays out to farmers if there is not enough vegetation available. That it works using satellite imagery actually that depict the greenness of the vegetation as an indicator or a proxy for the availability of fodder. So you have satellite coverage which on a daily basis actually takes the pictures and determines an index of greenness, and payouts are made to the farmers actually on the basis of this index. So forget about the traditional view of what we called in our jargon indemnity insurance. We call this type parametric insurance. It has the advantage that there is an independent third-party actor, in this particular case the satellite imagery and the provider of these satellite images, and that determines whether or not the insurance company makes a payout or not. And it is very, very fast, in particular in Kenya, where the scheme uses the mobile wallets of these farmers who have been pre-registered with their mobile telephone numbers to get the payouts directly. So this is very, very fast and direct. There are no other intermediaries in between.
Okay.
So this is a scheme that then allows the farmers to buy fodder, water, to keep their assets, their productive assets alive. Second one, coastal infrastructure, if you wish. We've been involved in one of the first programs. There's a gentleman in the back who has been involved in other programs in a similar fashion, which is designed to make very quick payouts after a hurricane has damaged coral reefs. Coral reefs are very important in Mexico, by the way. Coral reefs are very important for the tourism industry, and without if the hurricane destroys the coral reefs, they need a long time to grow back. But you can actually, through a specific intervention mechanism, you can accelerate the growing back of these corals significantly. So this scheme again uses so-called parametric insurance, that if we measure a hurricane of a specific strength, we know what the expected damage is on the coral reefs. The payout is made to an intervention crew on the ground to reconstruct these corals. So that's actually useful for the livelihoods of those who depend on tourism income. Another example in terms of critical infrastructure, Uruguay suffered from a tremendous drought back in 2012. At that time, their energy mix was very much dependent on hydropower. So they actually, the entire government went into a deficit with their budget of 500 million because of that drought. There was not enough water in the hydro dams. So again, the World Bank was involved in this program, and we helped to design a coverage for the hydropower production company, that if there is too little rainfall in the watershed that feeds the hydro dams, then they get a payout that allows them to buy thermal power production. So for instance, oil, to run their thermal power. So it's maybe not a good example here at COP, but anyways, you know, people need energy, okay? And there was no hydro energy available. So that payout was made contingent on, you know, the amount of rainfall. We also tied it actually to the price of oil at the time, so that they can avoid falling into a budget deficit. I think these are examples of where I hope it helps you to think of insurance, different applications of insurance that are way outside the traditional buying of property insurance. I stop here.
Thank you very much. Shrey, can you share some examples of innovative insurance solutions, maybe microinsurance or...
Well, yeah, so I think I'll go back to India because I think as the only non-European on the panel, I think I have a responsibility to do so. So I worked with GIZ on ICRI, innovative climate resilience insurance for rural populations in India. And our challenges started just from day one. We were working with the government of India on developing, developing climate resilience, and we identified insurance as a means to doing that. Now there has been a pattern of crop insurance in India and in many developing countries, providing products across the years, clearly trying to cover weather-related risks without ever mentioning the word weather. So they would not mention the word weather, they would say fluctuations, they would say this and that and so on. And they finally got around to talking about the fact that they were covering weather risks, by the 90s or so. The same pattern is now repeating with climate change. So they would talk about increased frequency of extreme events and so on and so forth. And we are just getting around to the point where climate change is mentioned as a factor. And this is a political issue because we spent months dealing with the government of India and trying to convince them that this was a serious issue, that your current programs are not working. And we had to sit through discussions after discussions trying to convince them that climate change was a serious issue. And this discussion was taking place with the Ministry of Environment, Forestry and Climate Change with the government of India. And that's because linking something with climate change, that makes it political, that influences the global dialogue, that influences the perception of climate as a risk, and the way the NDCs are framed and so on. So first I was just acknowledging the fact that climate change needs to be insured against was a challenge. And then on, when we looked into why is it so difficult to implement climate insurance on the ground, the high cost of doing any sorts of evaluations, of figuring out what are the conditions, are too low. You can't send somebody in the field every time there is a natural disaster or there is a possibility of a natural disaster. And to deal with that, we figured that we can come up with technological innovations and solutions. Some of them have already been mentioned by IVO in particular. So we were able to use remote sensing and GIS and satellite imagery to figure out what regions are the hardest hit, and that enabled quick payouts. And quick payouts are really, really important because historically there have been gaps because of the lengthy periods between disasters striking and farmers receiving payments. And that gap makes all the difference. So using satellite imagery, GIS and so on, that helped. We were also able to use mobile apps and drones in order to reach wide areas, and these solutions were developed customized for particular crops. So we concentrated on rice first because rice is it's a staple in India, and to make all this work, we had to build capacity at every level. So we needed to make sure that local government, that local financial institutions, they all understood how this works. They all understood how to make the technology work. Local universities and research institutions were also involved. And we created a national level dialogue between the central government, between international agencies as well. So Ensure Resilience was involved in fact, and we got them all together. So, and that was what, in my opinion, was what was critical, what we got right. But ensuring everybody is involved, ensuring everyone understands what this is, and ensuring that everybody trusts the system, because there's always a moral hazard involved when it comes to large-scale programs in a country of 1.4 billion people. So getting everybody on board, making sure everybody understood the stakes, everybody understood the technology at play, and this goes right down to the farmer level. So we also had to run financial literacy campaigns for them to understand under what conditions they would receive payouts, how to use the mobile apps, and climate risk insurance in our pilot studies, at least pilot cases, was made mandatory for anyone taking any sorts of financial credit or any other financial instrument through a formal mechanism, and it was voluntary for everyone else. And the farmers were only required to pay between 2 and 5% of the overall premium, depending on whether they were growing food crops or cash crops and so on. And and to make sure that we reached the people who need help the most, we also conducted studies on vulnerability profiling. So identifying which regions, which particular populations are underserved, which have the most need for resilience. And the idea is that when we talk about the agriculture sector, we are not just talking about farmers, we're also talking about agribusinesses. We're talking about that entire chain. We're talking about the entire rural economy. So the financial markets and all of these individual players, they had their own interests at heart. Aside from that, a challenge in Africa, in South Asia, is just the last mile reach. So again, that's often cited as a reason for financial unfeasibility of such programs. But institutions already do exist, and instead of replicating those efforts, you can partner with them. So we were able to partner with microfinance institutions, with local data providers of all other sorts, with rural banks, with community organizations, in order to set up identification, to do your basic KYC norm fulfillment and so on. And we were able to save ourselves from reinventing the wheel in most of these cases. So there are all of these innovative approaches which are not that difficult, that can be undertaken. It is really political willingness, and it is the willingness to learn of the financial sector that is key. So we got some good results. We are still keeping an eye on them. The program is formally ending in 2023, and then we are looking to expanding to other parts of India, and GIZ is interested in replicating that in other countries as well. And so far the results have been positive in terms of uptake and so on. And getting all players involved was key to it. That was the most important part, because this is something that's new to everyone. It's a challenge to everyone. So it cannot be treated as just another new financial product. It is something. It's top-down learning. It's also bottom-up learning. Yeah.
Thank you. Maria Jose.
Well, I don't have examples, but I have concerns. But I will put you one example, and I want to focus on what you are being introducing in the node. Can or we should ensure nature, and can ecosystem restoration help? And I think yes, restoration can help, because it was mentioned in the first intervention that one of the issues is the exposure. And what some ecosystems are doing is basically reducing the exposure to hazards to the population. And one example which is very well known is what happened with the extreme typhoons in Philippines because the mangroves were disappearing, which is an example where if you restore the mangroves there, you will increase reduce the exposure, increase the resilience. And this is, I think, a very interesting example, but there are plenty of examples like this in the coastal areas, I would say. My concern, now I want to share my concern. My concern is that we are starting to rely a lot on the nature power for mitigation. You know, for helping us to address this undecarbonizable fraction for 2050. So we are increasing the exposure now of the ecosystems because we are restoring and we don't take into account the vulnerability. And I think this is going to be a huge challenge for the future. I mean, if we don't do that right, which implies we have to integrate both aspects, adaptation and mitigation, and we have to avoid at any cost maladaptation being promoted by good willingness in mitigation, I would say. Then we are going to have a huge problem. So I think this is something that is a concern. I don't have a solution for that, but I believe that a better understanding on risk, a better understanding on how to address risk, what means exposure, which the insurance sector is very familiar with, and an educational role, I will say, it is also going to be extremely important. And I don't have more examples.
That,
Can I
Ivo,
react
yes,
to that?
sure.
No, you
no,
go
you go,
first.
Ivo, please.
Paco, after you.
Thank you. That about the forests and it's actually a great example of what happened. We're in the Spanish pavilion, so I'm obliged to talk about Spain. Spain has now more trees than probably any time in the 2 previous millennia, and this is nothing. This is very counterintuitive but if you see a satellite, not a satellite, an aerial photo of Spain 60 years ago, you say, where are all the trees? It's barren. So in our country, when the industrialization really took place in the 50s and 60s, and people abandoned the now called void Spain in the that in between. Spain is an atom. It's Madrid and the coasts, and the rest is void. So all those void areas, forests naturally began growing, and that's why we have more forest fires now in Spain, because we have more trees, because so far the exposure is not a problem, because we have been very lucky not to have big fires in those areas where the woodland urban interfaces, the outskirts of Madrid and Barcelona. We've been lucky so far. I'm not so sure how long we'll be lucky in the future, but for the moment we have very big forest fires where there's no one or nothing in between, so the exposure is very little. And of course the services have something to do about it in trying to make the forest not to reach urbanized areas. And the hazard levels have grown as well. So it's a really great example. And when trying to make sectors of different coastal areas, etc., agricultural risks, we also enter in another insurance problem, which is adverse selection. We have seen in Florida with Ian how not big losses, but of the households, about 20-25% were insured, not more. And if that's recurrent, that the risk areas are going, or the risk is going to be higher in these particular areas, or you widen the mutualization, and this is something that has been discussed here about losses and the justice of how we developed countries that are emitting more are causing the problems in the countries that are emitting less. Well, it is somehow a similar problem in which these areas that are more exposed to coastal risks, for instance, have to pay more premiums, and therefore insurance is unaffordable for them. So in a way, try to get some mutualization, which is probably not fair from the actuarial point of view. Probably it's also a matter of justice at a national or at a regional level. So I leave it in the air, and probably you will have something to say about it, Ivo.
I wanted to say something about the example, Maria, of the mangroves. I think indeed there is a growing recognition how important natural capital is, such as mangroves or coral reefs that I mentioned before, and their contribution to resilience. The problem is, nobody is sort of quantifying this, or there is too little evidence of the quantification of that value. And I think there are a number of things that can be done. So we've been involved in a study which was called the economics of climate adaptation. It's actually been more than 15 years ago when I worked on this, which tried to quantify the various adaptation measures and their contribution to risk reduction. And it resulted in a cost-benefit analysis of various interventions and the bang for a buck that you get for instance, natural capital, but also technical infrastructure, early warning, etc., etc. And if you do systematically these kind of analysis, you can actually quantify the value in terms of avoided losses of these mangroves. That puts an economic value on them. But I think we need to go even further for countries that have these natural assets, that they need to create inventories of these natural assets, and they need to valuate them, right? And if they're accounted for as public assets, then I would at least expect that there is a bit of transparency going forward and reporting of whether or not these assets are growing in value, whether or not they're actually degrading. So maybe the government is not doing anything about it, but without these assets actually getting a value, we can deal with it in fringes, but I think what we need is a systemic shift.
Yeah, I have a question back to you, because you mentioned natural capital, and you know that there is efforts now to quantify natural capital, and there are standards by the UN, and there are some pilots by developing countries being settled to do these natural capital accounts, which in a way it will help, at least comparatively, to value those assets that you are talking about. So do you think this exercise, it will be something that will help?
Absolutely. I mean, there are various initiatives going on about ensuring natural capital, natural assets. The UNDP is one of the organizations which is quite heavily involved in this. And I think they're once you have put a value around it, they're insurable as well.
Yeah, we are involved in this. That's why I mentioned that. I mean, we have the underlying technology in Spain that is for the platform of the natural capital accounts of the UN, which is called Aries for SEA. And we emerged from the ecosystem services, right? Which was a natural path. And this is evolving quite rapidly. And I think indeed it's quite interesting to see that the most interested countries are developing countries.
So let's have a chat afterwards.
Let's have a chat.
And Shrey, why do you think, it's interesting what Maria Jose said, that in a way a reflection from Maria Jose and Shrey, why do you think it is developing countries that are most interested?
Yeah, so the impacts caused by climate change, the losses and damages, and when I say losses and damages, I mean small l and small d. I think that's an important distinction. But the losses caused by climate change, they do disproportionately impact developing countries, and they're also the ones least prepared to face them. And in particular, there are small island developing states and countries with the heavy reliance on agriculture, countries in the tropical zone, although as we discussed, temperate zones aren't spared from climate change either. So countries in the global south are disproportionately impacted, and the existing infrastructure is not able to cope with these new challenges. On top of that, you have challenges from resource crises, from security issues caused directly or indirectly by climate change, climate migration, and so on. So there are all of these things coming together, and really developing countries at this point, they will take any means they can get to deal with this. Aside from that, so I've been attending these these COPs for almost 10 years now, and the way I have seen the dialogue change is that, as I recall, around COP20 Lima, there was a greater sense of developing countries trying to get developed countries to do the right thing, trying to push them, and there was a certain sense of hope that they will realize what they have to do and so on. The way it has changed is there is an assumption that maybe they're not going to, maybe we can't rely on altruism. Maybe we can't just depend on them having to do the right thing, and maybe we need to explore other avenues. And you see that through initiatives such as the catastrophe bond that a bunch of Caribbean countries have engaged in, which is essentially betting on the idea that tropical category 4 or 5 hurricane will hit Jamaica or the, I think, 7 other Caribbean countries. So these are all, there are innovative climate insurance schemes that are coming into play. There are greater interests in attracting investments and so on. So these are all mechanisms which countries are looking more positively towards, instead of waiting for rich countries to respond through policies, through NDCs and whatever. So I think that's why, I'm not a huge fan of having a market-based approach to everything, but there is a certain reliability because governments don't tend to be rational economic actors, and markets tend to be more rational economically, and climate change is now a crisis for the market. So developing countries are keen to get the market to help them out.
So if I can quickly comment on this. So Shrey was making a reference to what I also think is a very interesting development, because it can be applied at scale, where Grenada was actually the first country in 2015 during a debt restructuring exercise that they included in their outstanding sovereign debt a so-called hurricane clause. So that whenever a hurricane hit Grenada of a certain intensity and strength, they had a debt referral. I think it was 1 year or 2 year. So essentially liquidity relief in the case of a hurricane hitting. They just didn't have to make the interest payment or principal repayments for a certain amount of time. We see that picking up. Now Bahamas is another country, first also in a debt restructuring case, now even in a new issuance, and this essentially is a mechanism that can be applied, I would argue, going forward, also in any bank loan, particularly the development banks. I think whenever they extend a loan for a project, there could be what we call in our language an insurance rider attached to it, at least for climate risks, right? So that the project is not flushed out if there is a big event, and it is either there is debt referral or an insurance company takes it on its balance sheet and takes on the interest rate payments. So I think, and what I like about the idea, and this is sort of developing as we speak, is that it has scale.
Yeah. Okay, so I think we have some time now, I think, to open it to the people here with us. Unfortunately, the people remotely is be much harder to get questions from you. In between, though, while we open the questions, I will also mention to my panelists that at the end, I'm going to ask you about a hope and a fear from this COP going forward to COP 2028. You know, because we had a panel yesterday with the EU Climate Pact ambassadors and some people from the Spanish Citizen Assembly. And I think one of the reflections that came out from that session is, you know, COPs are important, but even more important is what happens in between. So in a way, it'd be interesting for us to reflect what would we hope and what would we fear going forward to the next COP. And with that, I would like to open the floor for questions from the audience.
Thank you very much. I'm Carmen Marquez and I'm EU Climate Pact Ambassador. I am not a specialist on insurance, but I have two general questions. The first one would be how the work of the IPCC is affecting insurance. Whether, you know, the fact of understanding better the risk of climate change and, you know, is helping to develop the insurance in a way that gets closer to the data and to the facts. And the second question is about climate justice. How insurance is influenced by these issues of justice. Justice, for example, between developing countries and developed countries. You mentioned this new approach to debt deferral. And I guess that this is going to spread as the years go by. And I am interested in knowing how the insurance is affected by this issue of climate justice.
Well, I will jump first to the pool. As for how IPCC is influencing the insurance, well, I think it's a twofold way, I would like to say. I think that they were two different worlds, insurance and climate experts, etc., and then they are getting to know each other in these COPs and with time. Of course, IPCC is the way of raise awareness in the sector, but I would like to say, in trying to give you an honest answer, that there is a very important key here, which is the regulatory part of insurance. In many ways, the ones who have to make things move are the regulators in each country. You know, insurance is a very regulated industry. Among other things, because we take the money firsthand, and then they have to supervise us and everything. And how I think there is a lot of willingness in the sector, both private and public, in trying to help. And I hope you have been able to get this flavor from this event today. But as for the implementation at the national and European level, for the ones I know, I think that the regulators have still to close the gap into putting these ideas into something more concrete, into making insurers report on losses, into facilitating things like the Building Back Better that Ivo said at the beginning, that in some countries it's impossible because you just have to pay for actual losses and not for foreseeable losses, maybe if they are a bit more than the actual losses. So these kind of things are the ones that should reduce this, you know, or should make the relationship between IPCC and the insurance industry closer, that it's getting closer with time.
Okay, IPCC first. For us, it's an important scientific basis. I talked a little bit earlier about the economics of climate adaptation study, for instance, that we've been involved in. So there are the pathways, the various degree pathways. And when we do these studies in terms of the cost-benefit analysis of various intervention measures for climate adaptation, we also try to look 30 years into the future. Obviously, there's a lot of uncertainty involved, but the basis for that are these IPCC reports and the anticipation of how does that, for instance, impact the intensity and the frequency of hurricanes or rainfalls, etc., etc. So it's an important scientific basis for us to try to anticipate of what is actually happening in the future. It's also very important scientific base for commitments that many in the industry have given in terms of, for instance, the Net Zero Asset Owner Alliance, or now the Net Zero Insurance Alliance, that promise to be net zero by 2050, and the number of companies actually signing up to that is growing all the time. So we take this very seriously, and it's an important basis for actually how we approach business planning or scenario planning for climate. You've asked about climate justice, so I actually believe that, and I assume you refer to loss and damage, which is a very, I think, difficult and politically loaded question. I personally believe that insurance schemes can be one of the pathways to operationalize loss and damage. And you may have picked up the recent announcement actually by the German government, but they went through the G7 and V20 process for this, the announcement of the Global Shield, which is is an umbrella initiative that provides funding through various vehicles, including for cooperation and co-investment by the insurance industry to develop new insurance schemes in emerging markets. There will be an announcement on Monday on the Global Shield, so if you're available, you should be coming to this. And there are already a few designated pilot countries that line up. If you allow me a short commercial on top of this, I happen to be co-chair of a forum, an international forum that we call International Development Forum, that has brought together more than 25 insurance and reinsurance companies, the World Bank, UN organizations, to bring the capabilities of the insurance sector to bear in international development. And that includes the risk analytics. There will be another announcement of the Global Risk Modeling Alliance, where we bring the tools that the insurance industry develops to bear, as well as our knowledge of designing new insurance schemes. So there is an increasing recognition, I think, in the international community of the value that insurance can bring to the table, in particular in the context of climate adaptation.
Yeah. Check.
I think Maria, you wanted to say something?
Yeah, I want to say something because I've been author of IPCC in different reports since 2003. And I think we have to be aware about what IPCC is. IPCC provides global analysis, and IPCC is composed by scientists. It's nothing else than scientists put it together to do global analysis, which provides very important signals at the global level. I think that's very important. But the scientific community, which is the back of the IPCC, has to work now on the specifics. And this is something IPCC cannot do. And I believe in this exercise is where we have to go as scientists, hand by hand, with the sectors to provide the context solutions which are really effective on the context. And we have to be honest about that we don't know everything to build these solutions. Is a cooperative, collective exercise. And I think this is the the path that science is now taking, and we have to recognize the role of the different parts of the science. But we had long discussions in the scientific community about if you can, using the global assessment tools, downscale down to being effective at the local or regional level. And this is something that IPCC tried in the 6th assessment report, and they couldn't do that. But again, IPCC is nothing else than a collection of scientists that can work at different levels, hand to hand, with the ones that have the expertise that can help to derive those specific solutions. And we also have the role to ensure that there's going to be a consistency in between scales. I think that's the key, right? So I think we are learning, and the scientific community is really learning that we can use these global pathways as a sort of container for consistency, but we cannot use the same tools for downscaling the solutions, because this is not going to work. The same thing we are learning in terms of we can have pathways for mitigation, but if we don't take into account the vulnerabilities, if we don't take into account the adaptation, we probably are going to recommend mitigation pathways which are never going to be realized. So I think that's my reflection about, I will say not IPCC. IPCC is a fundamental piece in this process, but behind IPCC is the scientific community, and the scientific community has to evolve as well. And I think that's what is already happening.
If I can offer a bit of a contrarian perspective, Maria, because you asked us to
Yeah,
have
sure.
a
That's
discussion.
actually.
I think you're probably right from a scientific perspective, right? That there is not enough knowledge available. There's a lot of uncertainty. I don't want to wait for that uncertainty to go away.
No,
And
no,
I
no,
think having directionally, it's good enough to have probably directionally correct signals of where the journey is going. And I think that's in many cases enough also for decision makers on the ground to assess, where do I invest my limited resources? Where do I get the best return on these limited resources to invest, for instance, in
No, but don't misunderstand me. I'm
adaptation
not saying that we don't have enough information to act. I'm not saying that. What I'm saying is that we have enough information. We have enough information to signal the right direction. I completely agree with you. Uncertainty for me is something that is being misused in this context, because we always take uncertain decisions in our lives every single second. So uncertainty is not a reason for no action, not at all. What I'm saying is that now we have the possibility to shape better the solutions because we can work together at different levels. And that's it. So there are complementary exercises. We have to keep giving these global signals because we need this global consistency, but we also have the responsibility to work together at different scales. And I will put you an example, which is not an adaptation, sorry for that. But my team, which works in low carbon economy, is been expending more than 2 years working with the civil servants in shaping the national adaptation plan for energy transition. And they, at the beginning, it was very hard for them to sit with them and sort of have the same language, understand the limitations, but finally it worked out, and it worked out in a way that we changed the narrative around that mitigation is an opportunity, right, not the burden. So, and I think this is the sorts of things that science and policy and private sector, they need to go hand to hand. We can't afford not to do that. But I completely agree with you. It's not, we can wait, we should not wait, we have enough for go in the right direction. But if we want to sort of guarantee that the solutions are going to be effective, we really need to pay very much attention to it. And this has to be done together. That's might take message home.
Shrey?
Yes, I think between science, policy, and the private sector, one missing piece that affects all three, and that is a bigger challenge for developing countries, is the availability of data, and that is something I mean that I've that leads to the failure, or at least uh, a limited success of many programs. As an example. So the UK government had developed a sustainability calculator, a scenario building tool, and they wanted to replicate it in several other countries, and we were trying to replicate the same in India. So we saw all the data sources they were using and how they were using it to create scenarios, to create projections, and as I mentioned earlier, availability of groundwater is a huge issue in India. And so many sectors depend on it that we needed to have a look at how groundwater availability is going to change. So we went to the Government of India, the Ministry of Water, and we said, how many groundwater extraction points are there in India? Please give us a range, because they said we don't know how many there are. And the range that we were given officially was between 2 million and 50 million. Now, we can't create the same kinds of solutions, we can't create the same kinds of scenarios if that is the kind of data we have. If you, so IPCC can provide global data, it can provide a general direction of where things are going, but how is climate change going to affect a particular crop? How is climate change going to affect a particular micro issue that then the insurance sector has to deal with, that policymakers have to deal with? That requires putting money into doing that kind of research and development, and that is less likely to happen. In fact, there is a study that the closer you are to the United States geographically, the more data you are going to have. So there's going to be more data on Brazil than there's going to be on Pakistan. So that's where we are. That is one missing piece of the puzzle as well, and that plays into the climate justice angle, because you literally the farther away you are from the developed world, the lesser options you have.
Thank you. Yep.
Thank you very
Absolutely.
much. Albert Martins from Curacao in the Caribbean. My question will go in the direction of Paco regarding the Build Back Better.
Mm-hmm.
Normally, about 10 years ago, there was a hurricane. It passes over an island. And after that, the insurers give the owners their money so they could build back better. But the building that they're going to build with that money will be less than what the building will be to build it at the higher standard. So that's already one question to how can the insurance company help the owners to build back better, but still in the old way that the house will be better built. And you have also another group that will tell you, no, I will take that money and build one apartment and take the rest of the money, do something else with the money. Those are the things that we have seen after Irma that passes in St. Martin, and there was actually a huge difference that people that got the money and didn't use it for other things. And my question to you then, is the insurance company, do they have a kind of, not authority, but guidance, how to help the owners to build back better, still that the next time the risk will be lower for them, and by doing that also that the insurance fee will be lower? So those are the two questions that I have. Thank you.
You want me to? Okay. So what you're essentially asking about is engineering, risk engineering support. So and that depends, I think, very much on the situation on the ground, whether or not there is of course, so only money. So, so the way, I'll give you an example from the UK, because I don't know the specific circumstances in the Caribbean and islands of what regulation or safeguards they are put in place. But in the UK, there is relatively recently is that concept of building back better has been elevated and is now being increasingly offered by insurance companies but they only pay you if you come with the invoice from the construction company which actually implemented this. So it's not just we pay you and then you could do whatever. I think that's absolutely within obviously the authority and let's say the conditions that an insurance contract can stipulate. Then the other question was, should the insurance company actually then lower the premium in response because it's a more resilience building? So this is a more difficult question because the way that in many markets, Spain may be different, in many markets there is contractual freedom. So it may be that the next time around the owner just goes to the next insurance company, right, to benefit maybe from lower premium. So obviously what the insurance company should do is once there is a hardening of the roof, for instance, adjust the price, right? But what does not work in many cases is that the insurance company pre-finances the intervention. There are a few exceptions where that works. For instance, in North Carolina, there is for so-called residual risks, insurance companies actually sometimes pay for hardening the roof, or you have arrangements where there's a very long-term relationship between the insurance company and the risks. We have that in Switzerland, for instance. We have in some cantons, we have monopoly insurers. They invest in risk reduction measures themselves as part of their mandate.
Okay, so I think we've done rather well. I think we've made insurance a very sexy sector that we all have to think about in the face of climate change. So I wanted to thank, well, first of all, our audience. You know, it is definitely Saturday, pretty much the last event, and so it's even more commendable that you stayed with us and, you know, asked good questions so that we could have a good discussion. I think we might have to skip on the promise for COP28, but I might email all my brilliant panelists, because one of the things that we said we would do as a closure of this event, we do intend to produce like a 2-pager of some of the things that came out from here. So I will definitely make sure that I get their inputs and their thoughts on our hopes from possibly COP27, but also going on to COP28. And just as a kind of final summary, I think some messages that I think came strongly from the panel. First of all, on the importance of integration, that mitigation and adaptation really have to kind of shake hands now, going forward together and faster. And because we're entering into the world of metrics and cost-benefit analysis and, you know, in a way understanding the effectiveness of adaptation, insurance sector has huge experience that can be really help us move faster into the direction of resilience and mitigation. Also the fact of collaboration, I've heard really the importance that it's not a silver bullet, that insurance can help, but other sectors have to come, you know, in the scene and really kind of work together, because we need scale in many, many ways, you know, from the farmer to the SMEs, which are very vulnerable and represent most of the economy in countries. I mean, I'm myself an SME, so it's really important that we take them into account, the local economy. And also that insurance is capable of producing insurance, you know, in different ways. I think importance of regulation, that we have to also think, you know, for the lawyers in the room, the scope here to think about this. And finally, the willingness of the sector, you know, that they are willing and they are part of the solution. And I hope all of you here are able to reflect on this, and then in COP28, we come with even more solutions from the insurance sector. Thank you very much.
Capo de familia.